Ladies and gentlemen, welcome back to the channel. AMC stock is now up over 5% here on the day today, and here in this video we're going to discuss the data coming out tomorrow morning, how that could move the markets, but even more so specifically what I think's coming for AMC stock in the near term, as well as go over everything that happened in the markets today. Hit the like button, subscribe to the channel, and let me know what you think about this information down below in the comment section. So AMC stock at the time of recording this video is up 5.19%, 5.26% now. Even though you did see a little bit of a pullback in the markets today, AMC stock just continued higher. And in fact, it looks like the short sellers are even doubling down on their short positions, which I think is fascinating that AMC is doing so well today, given all of the shorting activity that you're seeing with the stock. And we'll go over that here in just a moment. Your big level to get above, I say it all the time and I'll say it again, is that 50-day moving average at $4.34 per share. That's the big one we definitely want to be watching, right? If you get above that, things start to look a lot better. You could potentially run, 30 or so percent to your 100-day moving average, at least right now. Now, over time, that moving average will come down, but you are setting yourself up for some upside here. The main reason why you're even in this scenario, why AMC stock is up 5% today, is because investment bankers, JP Morgan, Citi, Bank of America, whoever owns AMC's debt, is trying to think of ways to get more cash onto AMC's balance sheet. Really in an effort so they don't lose their money, because if AMC cannot raise money, then JP Morgan, these other lenders that lent money to AMC, they're also going to be on the hook for that, and they're not going to get their money back coming in 2026. And that's not a scenario they really want to be in, just given who knows where the economy is going to be by then. Who knows what we're going to be facing by 2026 when AMC's $3 billion of debt comes due. I believe that comes due at the beginning of the year as well. So you have like a year and 8 months or so to figure this situation out. And, from my perspective, if AMC can raise capital, that's really the only way to get more cash onto their balance sheet without refinancing their debt, which that's all fine and dandy, but you're not going to change the principal amount. You can change the interest, make the payments a little cheaper. That would be good news for the stock as well, but it's not going to be that materially impactful when it comes down to the nominal value of the debt coming due in 2026. There's no way to effectively change that. So AMC needs to raise capital. Maybe they give us a commitment not to dilute shareholders. Maybe they get the stock higher than they dilute us. I'm not exactly sure how that's going to play out, but that is another potential scenario that could inevitably play out. Now, to the short sellers that are doubling down on their short positions, they are doubling down. You are now at 15.43% short interest of your float. You're literally a double in the short interest since the start of 2024. You were at about 7% short interest at the lowest point. Now you're at 15.5%. This short interest number is up 1% since yesterday. Just since yesterday. That's kind of insane. The last time we seen a rise in short interest like this, I believe AMC stock started to do very well. So we'll see AMC stock is now up 5.5% today, looking to march towards that 50-day moving average at $4.34 or so per share. Now, the dollar amount currently sold short is also up over the last 3 months, up about 26.5%. So shorts have started to take some losses on their positions, especially as now AMC stock continues to go higher. Currently at $164.7 million currently in short positions. Days to cover sitting at 2.9. That is up 178% in the last 3 months. That just means volume is a lot lower today than it was before. And, I think that just goes to show, look at how many people are watching these videos or looking at AMC videos in general. Normally I want to buy when people stop paying attention, when the hype is gone, when all things look bad for a stock, that's typically a good moment to buy. Now, that's not financial advice. Do what you guys want to do. I think most of you guys already have your positions, and you're probably underwater on your positions unless you have been doing some massive, averaging down over time. We need one hell of a gain likely to even just break even. With that said, you have 40.47 million shares that are currently sold short. Shares out on loan, 55.67 million. So you do have, almost 16 million shares that could be sold short that are not already sold short. Cost to borrow, 1.11%, utilization of 72.25%, and a short score of 70.74 out of 100. So, data's definitely looking good over here for sure. That is most definitely looking good. Option activity from hedge funds and institutions today. You can see one order totaling about $14,000 with a positive order value of 0%. It is an April 19th, $3.50 put for almost $14,000. So not a whole lot of option activity today from big money. If you take a look at the total call volume today, it's at about 64%, 74%. And the put volume today is at about 26%. So seeing a lot more calls than puts, and that's obviously a good thing on any day when you are seeing that. Now, if we take a look at the sentiment today for AMC, it's definitely flipped since even the last video. Yesterday's sentiment was bearish at 44. Today it's at 65. So looking good there. GME's potentially being a drag on just, the broader meme stock sector, if you will, being down about 15% today is definitely not an ideal situation. So nonetheless, sentiment looks good for AMC. Message volume today is high at 62. Yesterday was high at 58. So more messages, more search trend activity here on StockTwits as good. And the participation ratio is at 55, which is also pretty much where we have been as of recently. So that's also notable as well. Now, Stocko Tracker data, as I showed in the last video, got about 60,000 calls out the money. In the money calls at about 7,400. In the money puts at 3,700, and out the money puts at about 20,000. So a decent amount of option activity. And also, as I talked about in the last video, your big data is going to be on Friday when you get PCE month over month, personal income month over month, and personal spending month over month. That's your big data, especially obviously PCE. And depending how that comes in, you could get a big move in the markets. But Friday markets are closed for trading. I believe futures might be open for a little while. But you're not going to be able to trade stocks on Friday. You're not going to be able to trade this news. This news will come out. This data will come out, and markets will have to react to it coming the next week. So on Monday, which really makes things interesting. Fed Jerome Powell will also be speaking at 10:30 in the morning on Friday. If he says anything different, changes his stance or anything like that, that could obviously be big for the markets as well. If he takes more of a bearish approach, maybe less cuts, that's also not going to be fantastic for the markets. So that could be quite problematic as well. It's definitely want to keep our eyes on that coming on Friday, even though the markets are closed. Now, tomorrow we are going to get the GDP growth rate quarter over quarter final numbers for Q4. Corporate profits quarter over quarter. Oh my gosh. As well as initial jobless claims at 8:30 in the morning, expecting that to come in at about 215,000 jobs. Eventually, this is going to spike, initial jobless claims, and then the markets are going to start having a little bit more recession fears, in my personal opinion. People are already kind of looking for a reason for a correction in the markets, but we're just not getting anything. Like the Fed was bullish. The data has been, good, not great. Inflation data has been bad, and that's why I think Friday's important. If PCE data comes in hot, then that's going to be a huge problem. PCE, again, is what the Fed really pays attention to, and so for obvious reasons. That can move the markets a lot. But I don't know if the effect is going to be amplified on next Monday, or I don't know if we'll just kind of brush it under the rug, considering it's going to be a couple days since the data that comes out this Friday that we'll actually be able to trade off of that. So that makes things a little bit weird for AMC as well. Now, beyond just GDP growth rate quarter over quarter, final estimates for that come out tomorrow, expecting a big revision downwards from 4.9% to 3.2%. Also, that could be a little problematic, especially if you come in less than 3%. People are going to say, is the economy really that strong? And that's where you get larger downside if fund managers and market participants start to question whether earnings are going to come in as strong as we think. Well, a lot of that is going to be dependent on the consumer spending money and just how strong the economy is. Now, at 9:45 in the morning tomorrow, we are going to get Chicago PMI coming out, expecting that to come in at about 46. Last month, it was at 44, so expecting a little bit better numbers there. Michigan Consumer Sentiment, also final numbers for March, and pending home sales month over month and year over year will also be coming out. With that said, I think AMC stock's going to do well here until we get a correction. When we get a correction, AMC stock is likely going to sell off. It wouldn't surprise me if you sell off less than the broader markets, but I do believe once you get that correction that starts in the markets, which could be any time now, AMC stock is also going to sell off, but maybe, just maybe, towards the first Fed rate cut. And the path for this will depend based on the data. If PCE comes in hot, the GDP numbers come in good tomorrow, maybe we're not talking about the first cut from the Fed until July. But as of right now, you're priced in for June. To the contrary, if GDP comes in low tomorrow, PCE beats expectations and comes in low as well, maybe you're setting yourself up for the first cut in May, the next Fed meeting. After all, we still have April's data to get and the rest of March data to get. So definitely I wouldn't rule out a cut in May. I also wouldn't rule out a pause, until July or September. That's also a possibility as well. But when you get that first Fed rate cut, you should probably start seeing AMC reacting a lot better because it is so heavily dependent on interest rates and it does have a lot of debt. I think algorithmic reactions to the Fed cutting rates should be positive for AMC, but we will have to wait and see. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.